Good morning. I wanted to start out on a bright note. My colleague Eric mentioned the stunning results in India. And so I was just off the phone with my producer, so we're broadcasting live in a couple of minutes here. And they gave this stunning statistic yesterday. There was a massive sell-off in markets in India yesterday. $400 billion was the amount that was wiped off the value of Indian equities yesterday. Single worst day for Indian equity markets on record yesterday. So on a positive note, Eddie, how are you?
I'm good. I'm dealing with all the uncertainties in the world that you talk about every day.
So we're at the Wealth Summit, and one of the things that I constantly grapple with is how Hong Kong as a city measures its progress as a wealth hub, and what the HKMA's role is in ensuring that you are on path for those objectives.
Right. Well, as you know, Hong Kong has been the largest asset and wealth management center in Asia for a number of years. And we are continuing to improve our platform through a number of initiatives that we do in collaboration with other regulators and also with the government. Let me just give you a very broad survey of what we've done just in the past year. There are three areas that we've pushed out new initiatives. One is the new schemes introduced by the government. One is on single-family office, a tax concession scheme. So if any single-family office comes into Hong Kong investing $30 million US dollars, and they will be entitled to the tax concession. The second one, and I was told by many private banks here that the response from the clients has been very enthusiastic. So I'm glad to see that. And if there should be any further refinements to the regime, do let us know, and we are very happy to take it up. The second scheme is called the Capital Investment Entrance Scheme. That was just introduced in March. So for any individual investing about $4 million US dollars into qualified assets in Hong Kong, they can get a Hong Kong passport. And I was told again by the government that in just 2 months, they've already got 50 applications. So the response has been quick and quite positive. And this actually brings in new sources of capital into the wealth scene of Hong Kong. The second area is to increase the connectivity of the wealth products in Hong Kong with the mainland. And you're aware of the Wealth Management Connect 1.0 that was introduced about 18 months ago. It was a very cautious start with restrictions on quota, on product, or even on selling process. But it was a smooth start. That's how you do relaxation in China. You have an orderly, smooth start, and then you try to widen it. And we did the widening at the end of February with Wealth Management Connect 2.0 by increasing the individual quota, relaxing the eligibility criteria, especially for the southbound flows, capital coming from the mainland individuals to Hong Kong, expanding the suite of product from just bonds into equities, and make it easier for the marketing and selling process. And the numbers that we see in March and April coming to May is actually a very significant increase in the southbound flows, both in terms of the number of new accounts and in the remittances that were made. And of course, we will not stop there. We are already looking into whether there could be possibilities of Wealth Connect 3.0, and if so, what could be in it. And we are talking to the industry very closely about what's needed. Is it a quota, or is it the scope of products, or is it the selling process? So the connectivity has been increased very significantly through the Wealth Connect 2.0. And just very briefly on the third area is on our own regulatory arrangements. There's always a balance between regulation, especially investor protection, and the ease of business for our wealth managers. And taking account of the feedback from the industry, in July last year, we, together with the Securities and Futures Commission, introduced a new circular, basically making it easier in terms of certain requirements in suitability and disclosure for the wealth managers to deal with what we call the sophisticated professional investors. So that means the wealth clients with a certain asset amount and with certain experience, they can actually waive some of the suitability and disclosure requirements. So, and all these three tracks, new schemes, new capital, connectivity, and regulatory refinements, are actually an ongoing process. And we welcome continuous discussion with the industry so that you can actually tell us what we should do to even further enhance our wealth management center in Hong Kong.
Right, and I think Amy and Annabelle are here, of course, to talk a little bit more about what they want to hear, hear from Eddie. Wealth Management 3.0, do you have a rough timetable of when you want to get that in place? And also, based on the feedback that you're hearing from market participants, what's a sense of what they want?
Well, I think it's still early days. We've just introduced Wealth Connect 2.0. But I think Amy and Annabelle will tell you more what they want. But there are things like, for example, the quota.
Okay.
Currently, individual quota is up to 3 million RMB, but that's actually not quite enough for private bank clients. Is there a way to have a separate channel to capture the private bank clients? The selling process, it's been a lot easier and smoother than before. But can it be further streamlined, or can the marketing be made a bit more active? Can the education be done better? So I think there are still areas that we can look into in terms of improvements.
Okay, yeah, and you bring 3 million Hong Kong dollars. That's tiny, Eddie.
3 million RMB.
RMB, that's still tiny.
Here you're talking about mid-wealth, which actually has the biggest need for diversification on the mainland.
Right. Okay.
Because for the ultra-high net worth, they've got their ways of investing globally. But for the mid-wealth, for the middle class, they need to diversify. Most of their assets, personal assets, are actually either in the housing sector or in Chinese equities. And they have a very big need for diversification. And I think Wealth Connect actually provides them with this easy, convenient, and ready access.
So the affluent, the poorer of the group, as they say. Now, there's been certainly conversations on our shows a lot, and we have a lot of asset allocators here. An increasingly bigger allocation of people's wealth are going into alternatives, outside the public markets, into private markets, real estate infrastructure, private equity, private credit. As a regulator looking at that, that's an area of the market that is less liquid, it's less transparent. Are you concerned over the risks? How are you looking at that from a financial stability perspective?
Right. As you know, we ourselves as an investor has been going into private markets for 15 years already. So we kind of know the market. And you're right in terms of the risk profile and especially the liquidity. When I look at for example, private credit has been a very trendy area in the last
like bubble tea,
like bubble tea.
Yeah.
And when I look at it from the financial stability perspective, I thought there are individual areas that we will need to look at. For example, the lack of data, the leverage that they're having, etc. But I don't think, at least for now, that the industry is creating any systemic risk to the financial system for several reasons. One, if you look at the majority of their investor base, it's mostly long-term institutional investor who can sit out through cycles, who don't really have big liquidity needs. So there's not really a lot of liquidity mismatch in that portfolio. The leverage that we see from individual private credit funds is actually not big. They just use the client's capital to lend to those in need. And in a way, they're filling in the need that's left by the banking sector, the more risky part, the mezzanine, and they also go into some of the companies to help them turn around. So I thought the systemic consequences so far is limited, but it's an area that we will collectively, in the regulatory forum, we will need to continue to keep an eye on and try to gather more data, especially in a few areas. One is as I said, leverage. And second is the interconnection with the banking sector. Will there be more interconnection? So far, currently, there's not a lot. But will in future, the banks and the private credit companies will actually collaborate more by underwriting, by even participating in loans. The third one is whether private credit and private market will be further retailized. If you further sell it to retail market where people have different liquidity needs, they might want immediate liquidity. When these markets are very illiquid, there will be a mismatch and there will be problems. So I think these are the three areas that we will keep an eye on, but so far is manageable. Plus in Asia, I think the industry is growing, but compared with a very bank-centric system in Asia, private credit is still very, very small, but we'll keep an eye on it.
Yeah, and not to scare anyone, but is more regulation the answer, you suspect?
Well, at least more transparency, more data.
More disclosure?
So you know what's going on there. More disclosure, and for the regulatory community to collect more data on not just private credit, but generally on non-bank financial institutions that cover private market and also, for example, hedge funds.
Right. Just to pivot very quickly, I know we're running out of time. Hong Kong has been very active, increasing its links with the Middle East, back and forth. What's something we can expect to see this year as far as progress?
We've been actually focusing on two corridors, building infrastructure, building business links. One is the China-Hong Kong Middle East corridor, when we see a lot of trade investments flowing through this corridor. The other is China-Hong Kong ASEAN corridor. Again, China is the biggest trading partner of ASEAN countries. I was in the Middle East, both in Riyadh and Abu Dhabi, Dubai last year, having bilateral talks with the central banks, trying to create more payment links, for example, infrastructure links. And I was also bringing the banking associations to, for example, UAE, trying to build business links. There's actually a very strong wish of the two central banks to build these links together with us to enhance more trade to be settled, for example, in RMB. Currently, it's all in US dollar. Why not diversify some into local currencies, whether it's RMB or whether it's dirham? And there's a lot of interest in investing into this part of the world as well, Asia in particular, China and Hong Kong. But there needs to be more education. They need to know the means to get into this market, how to use Hong Kong through the Connect schemes to enter the Chinese market. Right. So I think there's a lot that we can do together to enhance this kind of interlinkage between the two regions.
Are there any specific programs that you think would be in place in the next 12, 24 months?
There's one that's already in place, that's already entering the minimum viable product. I thought I mentioned a project called Enbridge last year. It's a CBDC, Central Bank Digital Currency project, trying to enhance cross-border payment, make it faster and cheaper. It's done under the BIS umbrella with China, Hong Kong, UAE, and Thailand participating. And it's a lot faster. It's almost instantaneous settlement, and a lot cheaper than the current cost. And we've already entered the minimum viable product stage using trade settlement as the use case. And UAE is involved. And very shortly, there will be another Middle Eastern country joining.
Okay, I think we're down to our last 90 seconds. I think we have some questions from, on the lighter side of things, Eddie. We'll get to our favorite topic in a moment for the last 10 seconds or so. The advice for young people on building wealth.
All right. It's very hard, but I thought be patient. Don't believe in anybody who tells you that there's a product that's low risk and high return. It doesn't exist. And if somebody tells you that, it's likely that they are scammers and they're trying to scam your money. So you need to protect your savings. Yeah. That's one. But the medium longer term, I still believe in diversification. That's actually the focus of the exchange fund, even as a very, very big institutional investor. We actually claim to diversification. Diversification is the best way to have a even risk-adjusted return in the long run.
The best investment you've ever made? Money or not money?
Because being in my position for such a long time, I have a lot of too many restrictions on investments. Okay. So my best investment and the only investment that I have is fixed deposit with many of the banks here. So and you don't want to you don't want to imitate that.
Well, which bank offers the best deposit? Because
many of them.
Can hold them to account. Huh?
You know me. I do shop around.
Anything, last 15 seconds, anything on the Hong Kong peg?
It's not going to change, for the record.
Okay.
Now and
okay, you'll give us a heads up, right? In case it changes. All right, that's all we have time for. Thank you so much, Eddie, you, ladies and gentlemen. Thank you.
All right, thank you very much.